Alrighty, welcome to Success Paradigms, episode 30. We made it 3-0.
Yeah.
Should have been 5-0. Well, that'll come. My name is Emilio Garcia, and with me, as always, is Mr. Andrew Barker. And today, for the 30th one, we have a really special guest, and I always butcher everyone's name, so Rob Burleigh.
Don't stop now.
Well, I'm trying.
Got it. Yeah. You actually got that one, so man.
Hold on. Bob Burleigh is Director of Portfolio Management for Macro Advisors. I butchered that one.
Look at this, 2 for 2.
Damn.
No, that's right.
I'm done for the day. Andrew, take it away. But all kidding aside, I know the world, and I know what happens here is just opinion. So go ahead and give us your disclaimer, and then I'll just say ditto.
Yeah, sure. I mean, right. I mean, I'm just here to share opinions. None of it's like necessarily accurate, although I think it is, and none of it should be like investment advice. Before you if you hear something cool, you're like, oh, that sounds great, and talk with a financial advisor like Emilio before you go ahead and do it. Just none of this is meant for you as a person if you're listening, right? It's all general information. So something you probably need something more customized before you go ahead and put your money to work.
Yep. And we might not even get into that, depending on how your background story is. We sometimes get deviated.
Yeah. Sometimes
when we started talking about Andrew, we didn't get past the 6th grade. So anyway,
I have good information. He made it past 8th.
Hey. So let's get started. Rob, where are you originally from? I know you're in Austin right now, right?
Yeah. No, I grew up in suburban Philadelphia.
Okay.
And Philadelphia is an interesting town. I went to school in North Carolina at the University of North Carolina, Chapel Hill. And then out of school, I had a psychology degree, but somehow they managed to get a job in New York on the over-the-counter trading desk. 1998.
How did you manage that?
Basically, well, my cousin married a guy who was working on the desk, and someone left her, had to quit, and they were like, "Hey, do you want to do this?"
Yeah.
And it seemed
very northeast when someone knows the guy.
How many people with psychology background actually end up in the financial area?
Okay.
Right. I mean, I think it's more, right? Like it used to be less, right? I mean, there's definitely, I would say it's not required, certainly. I mean, one guy that I worked with, when we were trading, it's like, I don't even know what half of these companies do. I just trade the order flow or momentum, or, what his kind of opinion. And I mean, I guess to some degree, right, there's some truth in that, right? The market's made up of buyers and sellers, regardless of what you think about individual company, right? So I think it was an interesting way to approach the market.
Did you at least do any electives in market psychology or psychology?
Well, no. I mean, I've done some stuff, but not a whole lot.
So you took a Freudian approach to the markets.
I mean, I will say, a lot of what you do in college, per se, I don't necessarily think translates always to working in the real world and kind of learning on the job, which is what I did. For example, and a small example of that, when I was in college, I remember I told a girl that I was a psychology major, and she said, "Don't read my mind." It's like, I mean, but
I didn't say a psychic major.
Right, exactly. But the point being, I don't know. There was another gal on our desk who was an art history major, and I don't know. I think part of it, at least, with that element, was critical thinking, right, and problem solving. And I mean, it led me to. I did it for a fair amount of time, and then at some point, I was like, okay, I need to go back to school and get a more formal education in this. And that's when I went back to Stern. And like I learned on the job, but I want to know why these things are supposed to be the way they are, and that's what led me to go into Stern. All right. So yeah, and then I did that in the evening while I was still working. It was an interesting case study and application in real time.
Yeah.
And then then my wife and I had our first child. We were living in the city, and we're like, we're going to be commuting over an hour each way. Maybe, because we weren't on the wait list to be in the right like preschool or like daycare to get in the right preschool. And it was, so we decided to see if we could. Oh, what's that?
No, those things are. I always found it crazy. The kid is not even born, and they're already on wait list.
Right.
Yeah.
One of my favorites was my wife. She was a lawyer at Morgan Stanley, and she had a friend who told her a story. She's like, "We're not into the rat race of like what your kids do, or like how to get them into the right school." But they had a child, and I don't remember the age, but let's say 5 or 6, and they had to go to an interview to get them into the preschool. So maybe it was 4, I don't know. But if you're like living in New York, you've got either one really successful parent or like 2 parents that are pretty successful, but they make them both come in, turn off their cell phones. And one of the questions they asked them was, what sort of philanthropic activities have mommy and daddy taken you to? They asked the kid, and the kid like, he doesn't know the word philanthropic. What? I mean, and she was like, this is whatever. So illustrated the rat race. We're like, I don't know.
Oh my God. I don't miss
right? Like, so, we're like, there's probably a better way where we can live maybe a better lifestyle. And, kind of, we'd been to Austin for like Austin city limits was the first, trip we took, and we've been coming, and it seemed like a pipe dream.
Right.
And I guess those, like mid-30s or early to mid-30s, and we're like, okay, if we're gonna take a flyer, let's do it now. Let's see what we can do. First one to find a job, we're gonna move. And she got a job with one of the pension funds in town, and we came down here, and I kind of met everyone in Austin, had the most coffee of anyone I knew, and eventually ended up with a guy who had a book of business that was one of the wirehouses. And after some time there, he's like, I'm having trouble kind of doing like burning the candle at both ends, right? Like managing portfolios and building up my clientele. So I'd like someone to come in and help with one of them, and I think you could probably help me with the portfolio management part. And so we kind of developed some liquid market strategies, and we ended up leaving because we were looking for a larger allocation to better private strategies. So like, I think a lot about the global macro part, and we use research provider Hedgeye, and I think they have fantastic research for all different price levels. I recommend them, like just for like general, like Joe Smith that wants, or Jane Smith that wants to manage their account, like, is pay $30 a month to, institutional levels. I think they have a really differentiated way of looking at the market, and kind of rely heavily on that. And then we also rely on technical analysis, because again, I think that the market is made up of buyers and sellers.
This market,
I told my wife that at one point, right? Like,
this market is so. This market, I think, has more in common with sports betting than a traditional balance sheet, income statement, cash flow, earnings per share analysis. But I don't know what you guys do. I'm just.
Dude, I don't do any of that. I find guys like him, and then
I'm just like, this is.
Well, right, like
it's just
in this day and age, I think it's like 80% of trading is programmatic on a daily basis in equities, or 80 to 90%, which means it's like basically machines fighting each other for the most part.
It's that how? That's the high. That's almost scary.
It is scary, and it kind of makes
so
you.
Terminator. It's the Terminator guiding 80% of the market.
The more like it's true, the more like technology is moving so fast. It's almost a matter of time until Terminator takes over. Like I see, right? I mean, you get even like we were talking about Facebook beforehand, like right, it's how to make you like use the product more, and then like that's a machine, for lack of a better term, is not like it does what the people program it to do, but it does it better than the people could do it. And then like at some point, I mean, what decisions and what activities are you
artificial
doing?
intelligence is coming.
Right?
It's supposed to be utopia where we all just play golf all day, but now I don't see
I think that's the other Terminator. The alternate ending is everyone plays golf all day.
I like that one better.
Me too. Me too. I mean, I guess in theory, like it doesn't have to end badly, right? I mean, it could be, Wall-E, right? What was that movie where they're in the sky,
yeah,
like riding around
that's
drinking
even worse
Slurpees all
than
day?
Terminator, I think.
It kind of is. I don't know. They are both kind of
That
pessimistic
sounds-
views of.
I sort of got us off on a tangent, so you finished.
Yeah, we'll let you continue working, Andrew, and
Yeah.
Rob and I will leave off of our residuals in the golf club.
Right.
That's probably more true than I wish it was. But more power to you guys for, doing what you do well.
But you were saying something, Andrew. I cut you off.
No, just I felt like I didn't mean to lead Rob sort of down a rabbit hole as I'm prone to do. You were telling us a little bit more about Austin, and so you're planning on staying there. You're happy there.
Yeah, I mean, well, first of all, I love rabbit holes. Like, I mean, don't get me started. Actually, I have to fight myself to prevent myself from doing that.
Yeah.
But because I'm always like, more information is better, which is not true.
Well,
I've come to learn.
Not always.
But, right? Like, not always. You get the paralysis analysis or whatever it is. Yeah, so Austin is, it's great, right? Everyone's moving here now, all the cool kids. And what we were, I guess, when we left, the Wirehouse, we were looking for better alternatives, right? A lot of our clients, we're not trying to make them rich. We're just trying to like get them a return stream that, there's acceptable. We always say, like, if we had a 10% CD, if like money market rates were 10%, you wouldn't talk to us because you could just take your, millions of dollars and make 10% a year.
Well,
so we try to find
rabbit
stuff
hole
that's not
I'd love to
correlated
go
with the
down
market.
and found this maybe on another episode, but like the equity, if you talk to equity investors or people that pay attention to the equity, the stock part of their portfolio, they're ecstatic. You talk to people that are retired and we're depending on yield,
Oh, right.
funds, whatever kind of debt or
There's so many.
cash equivalent.
I mean, I think we're at this weird like environment, right? There's so many dichotomous forces kind of fighting each other. But I mean, the Fed can't really let rates get too high, or then there will be large scale defaults, which is what they were just, as we went into COVID. Well, first, before that, at the end of, I get my years mixed up. At the end of 19, right, they were trying to taper, right? I don't know if we recall that in like, I think it was 19, right? And they like actually started to take the balance sheet down, which was way late for, it should have happened way sooner.
Yeah,
better late
than never.
Sooner. Well, but then like the market like almost like went out of business, and right, I mean, they finally like ramped the purchases of not only the treasury bonds, like injected liquidity in the market, but they were buying high yield ETFs. And I think at that point, like, I mean, it's always been kind of understood, but like at that point, we couldn't let things go the other way because we had, the bank financial crisis was put onto the central bank balance sheet. And now the central bank can't let, those banks go out of business because we're as levered as we ever have been. So they, I think right there said, in some ways, like, we can't let the market go down, right? Because if that does, then there's potential high yield spreads blow out. And like, what do they do then? I mean, in Japan, they're buying stocks. I mean, I don't know how palatable that is to the rest of the country, but I mean, at that point, then like, is it really even a free market?
Hmm.
I don't know. Whatever. These are things I think about in my nerdy late nights.
Well, there seems to be almost, I had to oversimplify it grossly. Is everyone just saying let the good times roll? So it's just, don't question it, just enjoy it, right? Whatever, almost everything's going up. And it's not just stocks, the financial markets, the securities market. I mean, real estate in any half decent city is going through the roof. It's doing great in Texas, as we all know. I mean, maybe if you're in Los Angeles or New York City, it's going the other way, but those are actually the exceptions because they're doing so many things wrong. They're not going up. Everywhere else, anywhere half decent or good, it's going up. So it's, I mean, I've seen these silly memes about lumber at Home Depot, but it's true. If you've gone to buy, go to Home Depot and see what a 2x4 costs and like what happened. So there's so much, they've injected so much liquidity, cash, whatever you want to call it. It's no longer just in the securities markets. It's now actually, my 2 cents, it seems like it's for the first time affecting quote unquote Main Street real world when it's affecting 2x4s and other things like that. And you're in the supermarket. I don't have hard data on that. I'm just doing this observation. I'm not a financial advisor, so I can say whatever I want. It's not financial advice. Talk to these guys.
Well, I mean, no. What?
Rob, you're frozen.
Got him. Arizona State.
I think we might have lost him.
Let's give him a minute.
There we go.
It was Facebook. Facebook
Better?
Live, and when it did, it frozen.
We can stop.
I like to blame Facebook. I mean,
yeah, we can hear and see you again. Thanks.
Yep, we can't hear him because you're muted again.
What song is he dancing to?
I don't know. He's
Maybe.
bouncing around.
how's that? Any better?
That's good. That's good.
Yeah, the green screen makes it look really funny.
I know.
But the screen doesn't move anything, so it's like you're bouncing around.
Right. So, like, give me 2 seconds to approach.
Oh, now he's gone. Oh, there you go. That green screen is playing funny.
No. It blew my cover because I felt like it was looking really great, like a nice.
Yeah,
streak.
all of a sudden you disappeared in there and then came back up. It's like, oh, nice. Hey, special effects in here. This is Success Paradigms. We even go around the paradigm and have different effects. I'm the tech guy and I don't have the. You know what? I was going to tell you, Andrew. Sorry, we're going to another tangent, but I got a green screen. It works exactly inverse to what it's supposed to do. I turn on the green screen on Zoom. Screen is green. Everything else is on my face. Background is my body. The screen is green. I'm like, no, I think that's supposed to work the other way around.
And the crazy thing is, if you tried to make that happen, you couldn't in 100 years.
Oh, hell no. I know. But anyway, I tried a couple of times. I'm like,
I'm telling you, technology.
Anyway, back
I
to.
hope it's not the same robot that designed that's managing the stock trading.
Oh, hopefully not.
Terminator, I think we decided it was.
Yeah.
Well, don't go there because then we have artificial intelligence and then we start getting into robo-advisory and from there cryptocurrency and it's going to go crazy.
I mean, like, think about it, like the robo-advisor, I mean, if everyone does it, you almost have to do it.
Yeah.
But then also everyone, I mean, isn't it almost what we're seeing with like what handful of stocks make up 80% of the movement in the S&P 500? I mean, it's a couple of tech stocks, right?
Facebook and Microsoft make up like 10 to 15, it's a large fund.
It's
And Tesla's probably in there as well.
It is.
So it's again what you and I learned at Stern. The math has changed because there's so much concentration in each handful that we're seeing things happen in the markets that really haven't happened before. I mean, we've been over really long periods of time. Not that they're rare. It's like it just didn't happen. I mean, last year when the markets fell with the COVID crisis in March, everything went down. Like there was no diversification. There was no hedge.
Right.
Everything went down. Of course, if you had structured your own derivatives or options or what have you, you may have been hedged. But there wasn't a single asset class that didn't go down. Some went down more than others, but they all went down a lot.
Yeah.
So it's like, wait a second, that's not what the textbook says. And even in prior crashes, it wasn't quite that. I mean, even gold went down, which historically has sort of been that hedge, that effective asset that you keep a little bit up for craziness, and even that went down. So some anomalies, or maybe they're the new normal. But it's weird.
I mean, I kind of think for now they're the new normal. I mean, and I think, it's kind of appropriate. We were talking about the Terminator and whatnot. And I had a friend that I was talking to the other day, and he said, "Do you watch baseball?" And I said, "Yes, I watched every game the Phillies played in 1993." He's like, "Well, a lot's changed since then." I said, "Okay." And he said, "The game that we used to play, it's not really like it." He said, "Now, they'll have the strike zone, but not just like how you hit, but like what part of the strike zone you hit well. So like the pitchers then like obviously pitch. I mean, they've always kind of known where your sweet spot is, but they'll like understand like if they throw it to that part, like spot, where are you going to hit it in the field? And they move the whole defense to the other side of the field, which definitely changes baseball. But if you're trying to win and like all of a sudden that work, like you're going to do it. And it's almost like, the markets, right? If the flow of money is into passive and machine driven trading, well, if you want to win, you have to do it. And then it kind of like further reinforces like more power
That's
and
a
money.
self-fulfilling
Right.
cycle.
Right. Which is kind of crazy.
Wow.
Yeah, I mean, go ahead, Emilio. You were about to say something.
No, go ahead.
Is there, gentlemen, is there, I don't know how to structure this question, but one thing is sort of investing for the short term. A lot of people are just trading. You remember this in prior times when the market's done well. Everybody starts investing, but they're really trading. Even the doorman and the taxi driver and the pizza guy are on the market. Just gone. You okay, Rob?
I am okay. Okay.
There's a ghost system machine over there trying to hear me talking. I guess what I'm trying to say is, any perspective as to truly long-term investing, like think 401k plans and stuff like that, it's truly for 20 years from now when you'll be living on residuals?
Well, I mean, I think that no matter who is, I mean, we never start with politics, right? Like whoever is in charge, like everyone wants the market to go up, right? They want to turn it into kind of a utility, like remove the volatility and let the market just go up, and then everyone's happy to just make money, right? It's great, and it'll work until it doesn't, right? I mean, it's unknowable when these sorts of things will stop working, but I think until they do, you kind of have to be on the merry-go-round, right? I mean, we spent a lot of time thinking about things that, not that it didn't matter, but like we're overwhelmed by the flow of money and, just the central banks, which one of our things is like debt demography and central banks. And central banks are winning with more debt. Demographics are not great. If we're looking out 30 years. I don't know how you bridge the gap between here and there, but.
So pardon me, Rob, so you're saying globally, or you're thinking more like Japan, which is sort of famous for, I think they're not even on a basement birth rate, and they don't have a lot of immigration, or you're talking about right here in the US? Because I've always heard the story that we have so much net immigration that we sort of stayed, the United States stayed demographically speaking young. Much
Well, we do have better
And
demographics than many countries, certainly.
It's still not great.
Well, right. I mean, globally, it's not great. And I mean, 2020 didn't help it. I mean, the birth rate or death rate or whatever, I'm stealing researchers' kind of ideas, but like it might have actually gone negative. And
So
it's
maybe Emilio, what's your thoughts on this? So everyone stayed home, and this time they didn't have sex. Like every other crisis, people stayed home. Birth rate went up. What happened to Americans who went from being
They had a face mask on, so it was like, nah.
well, I mean, no doubt this time, like, right, this was like forced staying home. And I think
It was different.
it was, I mean, it was hard. Like, I don't think
I said it in a silly fashion, but it's a legitimate question because it's the first time. I mean, even with like blizzards up in places that get snow, if there's a serious blizzard where people are forced to stay home for even 4 days, you have a birth spike from that. So this is weird. It's like, wait a second, people stayed home, were forced to stay home for a really long period of time, and did it get fat?
That is, it does seem that way, right? But I mean, like, I don't know, 4 days and 4 months, I think maybe are different time. I mean, at some point you're like, I need
that's
to
fair. That's fair.
But no, it is like, I mean, it's kind of surprising, right? But I'm sure we all felt it to some degree.
Yeah.
And but like the net immigration, even with that, it's like, I mean, I'm getting, this is one of my sometime in the next 20 years, it's going to fall again to flat or negative. And I mean, regardless of what party's in power, it seems like we're just spending money to do different things, right? And so it's because it's expedient, right? Like, let's just print money and everyone's gonna be happy until we're not, right? Just keep punting problems. And I mean, it's not a rosy outlook in 30 years, but maybe there's right, maybe Terminator comes in and we're all just living off the residuals. So it's I mean, if you look like, this is a problem, right? If we look too long term, you can't know what transformational happens in the interim.
Yeah, I think too long term is way too hard.
Right.
Too much in
Well, I think, and also when you look too long term, that's when we all train to ignore it. The politics will really do matter, because if you look at long term 20th century, you had two major wars in that century, and a whole bunch of other sizable ones, right? Depending on what country you were investing in or living in. So it's, yeah, it becomes much more complex. But I'm even thinking out, most of us chief financial officers, the question we always get is 3 to 5 years, 6 years. I mean, very rarely do they seem to. It's always this sort of business school MBA assumption that it's just straight line it, right? I mean,
if we're being honest, right, 6 months is like pretty good.
That long, you sort of, especially, I mean, if you're many parents, and Emilio helps a lot of these people have children that will be going to college, right? So they do have to think in a, not next year, not 20 years, but they do have to think in the next handful of years, okay, what do I do? And that's pretty hard right now. As you already touched on, both of you, I mean, that's not going to function. So you got real estate and other the stock market, but it's a harder question than it used to be.
Yeah.
Despite the fact that the market's doing great.
Right.
Because of it.
I mean, my personality is always like, be dynamic, right? Like, I don't know, maybe it's working for now, but like, you never know. Like, always kind of look over my shoulder and like, yeah, no, it's right. I mean, you look at it's like a real estate deal. It's like 10-year term. You're like, well, I don't know. Do we want to own this property in 10 years? Like, we probably want to own it in 5 years, but I don't know. Like,
I mean, real estate's a lot. I think on real estate, it's a lot harder to be in denial than the stock market. Real estate is very clear, depending on what kind of real estate it is, what the future looks like. If it's residential, as we've already touched on a little bit, if you're in a good location, it's tough. But if it's commercial, a lot of commercials are so overbuilt. And then the resistance of people to go back and working jam-packed expertise and cubicles in an office. We'll see what evolves, but they've got a lot of restructuring to do, even if they just sign up the court restructuring.
That's true.
Yeah, commercial real estate is going to be interesting going forward.
But that restaurant scene looks like they got hurt, but here in Dallas, for example, they're coming right back. So
they are, but this weekend my kids actually wanted to go to a couple of places, and I think we got to the fourth one, and they said, "Let's just order in," because every place they said, I'm like, "Yeah, that one's not there anymore." Well, let's go here. Sorry, but that one's also gone. Until they said, "You know what? Just order something." Like,
you had them so depressed by that point.
Yeah, they just said, "Eh."
They were afraid if they kept going down the list, they'd have no places for the future either.
Yeah, I mean, well, their favorite places are still there.
Yeah.
That's still there. So.
And that's
Austin, do you live in the north side, or? I have a couple of friends in Round Rock, and
I don't. I'm in like kind of like Westlake, so it's kind of like west, but it's kind of on the southern part of it.
Okay.
Like it's kind of funny. It's a small town, but like people are like Round Rock, like, oh, it's gonna be a drive. I mean, it's night, like right. You probably wouldn't go between the two.
It's not that small, and you got to go around a lot of stuff.
Right.
It's one thing that I know is nicer is you guys do have hills.
We do have hills.
Not. We moved from Georgia, and that was the first thing my wife said. It's like, what the heck? Where are the trees? Where are the hills? What's going on? This place is flat. Like, yep.
Plano, right? They got the
Plano. In Spanish, it's plano, flat.
Well, my dad came to visit.
That's my theory. It was a Mexican that came in and said, "This is plano."
Clearly.
And it is completely. Very cool.
Yeah.
I got to go up to your hometown, by the way. My brother lives up there, and Philadelphia has always been one of the places I wanted to go.
It's cool to visit. Veronica and I went many years ago, and there's a lot of history there. It's definitely.
Yeah, it's a place to go, but I don't know. It's never happened, and now I've got a brother up there, and it still hasn't happened. I think maybe now it's going to happen less with him there, but
like the likelihood just went way lower.
Go the other way. Oh,
it's. I will say, I think that has the best sandwiches of any place I've ever been.
Philly cheesesteak. It's one of my favorite.
Right. Well, dude, I think actually outside of Philadelphia, it's pretty tough to find one that is actually good. And I don't know why. It might be the bread, but like they have, I don't know, like they call it the hoagie, right? It's like just a sub, but I think they're better than anywhere else I've been.
But I mean, there's some truth to that. In other words, the water, the air. I mean, there's some.
Yeah, but there's some that are better than others. There's a hole in the wall here in Plano called Freddy's, and they actually do a pretty good Philly cheesesteak.
That's cool. There's a place here, like someone opened, and like even when I was in New York, though, I thought like, oh, these are garbage.
New Yorkers don't know what it is.
Yeah, there was one down, like there's one here. There's a guy from Philly. Not that there are people who've been relocated. It still doesn't work, but there's a guy here in Austin. Maybe my taste have changed because it's been so long. Where I'm like, oh, this one's actually pretty good.
You just haven't had the original yet.
I'm so desperate that
happens to me with Mexican food. It's like, oh, this is good. No, dude, that's Tex-Mex. Well, I don't get that. No, not that far. We'll never compare Tex-Mex with Mexican.
Rob, how close are you to the racetrack?
Not well, I mean, I don't know, maybe 30 minutes or so.
Oh, wow, okay.
Yeah, because if you're west, the
Okay.
track is east, right? If I remember correctly.
Yeah, right. So it's like 20 minutes to the airport from my house, which is nice because like someone lands, I'm like, well, just text me when you land because by the time you get your luggage and get outside, I'll be there.
Yeah, that's cool.
Right. So that's pretty sweet. But then, it's another maybe 10 minutes past the airport.
Yeah.
But I mean, like that is like an interesting developing area, I think, in terms of growth seems to kind of be moving that way. I mean, I'm not in real estate.
I haven't been down there. God, time flies. I haven't been probably in Austin proper in 2 years, in San Antonio right before COVID. But it almost felt like those last two times, San Antonio, Austin was almost becoming this one giant.
I mean, that makes sense to me, right? Right, like you think the Eastern Seaboard, where everything kind of like blends together.
Yeah.
That's totally happening.
Yeah.
It'll eventually happen.
I'll actually make it to San Antonio. I haven't been yet. Been here 7 years.
It's not if you're joking or serious.
I am serious. We've been here for 7 years.
Way.
I've been to Dallas and Houston, and I still have yet to make it to San Antonio.
That is funny.
If you go the river walk,
It's fun, yeah.
it just happened, but St. Patrick's on the river walk, it's a lot of fun because they actually tint the water green and all that stuff. They go all out. Probably Cinco de Mayo, which is I won't get into that, but they'll probably do a lot down there.
Hey, it's a good reason to have some good tequila, right?
Yeah.
Why not?
But so is Wednesday.
Oh, now I know why you like him, Andrew. It's right up your alley.
I talk finance, economics, inflation, rates of return, and tequila.
And tequila. Now we're talking.
That's true.
You actually have your happy hour this week, right, Andrew?
Yeah, it's in in Addison, Addison Circle, El Rincon, or how the gringos say it, or it's they've just opened their second restaurant, and it's over there in Addison. Yeah, so we'll be there Thursday 5. I'll be there around 5:30. Some people may show up. Early birds show up around 5, but you'll be there.
I'll be there.
Right, cool.
I'll check my calendar because you normally ask me to be there early.
Yeah, if you can be, great. Rob, next time, yeah, if you're going to be in Dallas, always check it. Let us know because we typically know where there's interesting people.
Now I know people in Dallas.
Yeah, there you go.
Yeah.
And that guy knows a couple of restaurants.
All right, I love restaurants.
Are they still know more restaurants than I do?
Well, correct, yeah. But you know more bar areas in restaurants than I do.
Okay, so that's why we're a good team. There you go.
All right, so Rob, what's in the future for you? I know you said you had, how many kids did you say? Because we started talking about when you guys were moving and all that, but then
We just had
someone pushed you into the rabbit hole and we kind of lost track.
the rabbit hole of the internet. My Wi-Fi connectivity went.
Oh,
We're slaves to it now, though. Could you imagine where all that Wi-Fi?
dude, I was all joking aside, and not that I know, I've heard. No, but I was, my daughter's going to college, so I was working with someone to get scholarships, and they said, try this, and they gave me a couple of sites. Dude, I told them, and again, not that I know, Andrew told me, he said, this is like porn. One, you click one, and it opens 20 more, and you click on another one, it's like, where did I start? Where was I? And that's what I've heard Andrew say happens with porn, but it happens with college scholarships.
That's not for me. You heard a lot of other things to me about tequila, perhaps, but that's not my area.
I will say, there's a restaurant with a funny sign down in Austin, El Arroyo, right?
El Arroyo, oh, that dude, I love their posts with all the different signs.
Right, and one of them, some of them somehow are still so insightful, and the one was like, remember when you used to have to get out of bed to check the internet? And it's like, wow, that really is so different. Like, because now, I mean, sure, that's like one example, but the internet's always with you on your phone. It's really, I mean, like right when that wasn't even that long ago, like 2005 or six, like you still had to like get up and go to the computer to be like, what is the weather?
And dial.
Right.
The modem, hear the handshake. Those were the days.
Yeah.
My son was trying to use my cell phone and he was holding it like this, and he's 8, and he was trying to use it, and I'm like, oh, you don't even know how to hold a phone, because everything's done like
Everything's Zoom now. It's like
right.
Did you guys ever see there was a video out there of people asking kids
Yes.
what a rotary phone was and how to use
How to
it?
work it.
I haven't seen that one.
Oh, dude, they would just stand next to it and start pressing in the holes and say, "Where's the caller ID?" And
It's worth Googling. It's pretty funny.
what do I do?
You're
And
watching
they're like,
older
"Pick up,
movies
there's a
from
noise," kind of deal.
You're watching older movies from the 70s and 80s. Oh man, it's like police didn't even have any really good communications. I mean,
Yeah, you've been posting all about movies from the 80s and 70s lately.
yeah, I'm catching up. It's fun to rewatch some of them. Some have not aged well. Others are still as good as you remember them.
Yeah. So we went into another rabbit hole. How many?
Well, that's the fun of this podcast.
Jeez.
Perhaps you should change the name to
So Rob, we don't want to forget. How do people reach out to you? Do you have a website for or?
Oh yes. It kind of has a limited amount of information on it. It's macro.com, macro, and the Q is supposed to be quantitative, so it's like macro mixed with quantitative. So my email is rob.burleigh, which Emilio got right on his first try, BURLEIGH at macro.com. And I'm always, up for chatting, doing, podcasts.
Yeah, and let's we'll have you back on in a couple of months so we can see sort of how crazy the market. The crazy is too low to the word, but how interesting and dynamic and automated the market.
I kind of think it's going to melt higher. And I'm usually a pretty pessimistic person. My theory, there's a lot of factors that haven't been I think digested. Everyone knows, there's the reopening trade, but we were talking about, everyone was staying home. It's so bad, they're going to go out, right? And then they're getting these stimulus checks, and then we're going to do an infrastructure plan, and then, companies have been saving money, people have been saving money, so buybacks are going to start up again, and it's just, I think the table is set for, and it already seems so extended, but I still think that it can surprise people, right? Because everyone's like, it's so extended. So once everybody gets on board, I remember 2000, and it was like, who cares? Who cares what a stock does or what their price is?
That's exactly what it reminds me of.
Mm-hmm.
I think my totally unscientific 2 cents or not even 2 pesos guess, we're fine until December. I think that everyone's just too damn happy that we're done with whether we're done with it or not, and it's the technical medical sense. Emotionally, people are done with COVID. There's vaccines. It's the spring. I think at least until early fall, the markets keep this resiliency, and as long as there's not major COVID bad news in the fall, I think it keeps going right until December.
Even if there is bad news, every time there's been bad news, it's just been a buying opportunity, because then you're just going to reopen again.
Yeah.
See, I love it. You're using the psychology, my psychology degree.
Handy, good.
All right.
Hey, well, this is a lot of fun, guys.
Hey, and by the way, I do have an office in San Antonio. I might be going down in a couple of months, so I'll pick you up and take you so that you can go to San Antonio.
I heard they actually have a good Mexican in San Antonio, because I think the Mexican in Austin. Okay.
You can find a couple of places everywhere. The problem is most of them are going to be Tex-Mex. You have to search for the real stuff. And normally, the easiest way to tell is if they give you chips and salsa. That's Tex-Mex.
No,
What should I look for?
one thing, chips and quote unquote queso. Don't get me started, man.
Queso or queso? Remember that one? That was funny.
Yeah.
You ordered a queso thinking it was, they call it queso fundido, melted cheese.
Yeah, that's what yeah, exactly.
Melted soup that they do here.
Wow.
I said, dude, it's easy. Did you say queso or queso? It's like, oh shit. They came out with a liquid one.
Yeah, I just moved here. You live and you learn, right? You have fun along the way.
Yep. Anyway. All right,
This is a great start to the week. Thanks, guys.
Here, this has been Success Paradigms, episode 30. And if I can get my wording straight, I'll just end it there. Thanks again, Rob. And
thank you, Rob.
Mr. Andrew will be back in touch. We'll be back here next week.
All
Have
right.
a good one, guys.
Have a good one.
All right, ciao.